And we are back with another Pulsewave report. This one is a special one. This is the opening bell report. And we're going to take a look at what the markets look like thus far, see what the overnight action has been, and then we'll go over a few more things. So real quick, I don't know if you can see the quotes up, but I got them up for you anyway. If you take a look here at the US dollar index, right now it's off 5 pips at 98.44. If you take a look at the Bitcoin futures, we're up 1,750 points at 42,970. You can see Ethereum futures up 89 at $3,010.50. Dow futures up 188 at 34,624. E-mini S&P 500 up 24 and a quarter at 44.76 half. The E-mini Nasdaq 100 is up 69 and a quarter at 14,437 and 3/4. Russell My Hustle up 11.8 points at 2074.40. Gold futures off $5.40 at $1,924 even. Silver futures off 35 cents at $24.95 per ounce. The mini crude, micro crude oil futures is down 44 cents at $109.53 a barrel. It did rally all the way up to $113.34 a barrel in the overnight market. Nat gas up 22 at $5.12. We got soybean futures up 2 points at 16.93 and a quarter. Corn futures are down. They're down 9.87, and we are at $7.46 per bushel. And finally, wheat is up 15.75, and it's at $11.35 even per bushel. All right, and let's take a look here at the Forex futures. We got the euro currency up 7 pips at 110.56. Pound sterling up 101 pips at 132.56. And the Australian dollar is up 55 pips at 74.55. So that's a look at what things are looking like as far as the overnight markets and what has transpired there. Now, let me see if I can show you my next screen here. Let's see here. So you can see where I'm at. Okay, let's see. All right, so picking up from yesterday, I moved my stops to the recommended stops on the report. I did not choose to pop the Russell, Nasdaq, or Dow futures. Instead, I chose the recommended stop on the reports. Reason being is because I like the way the signals were looking on the report. So I figured I would go ahead and let the market have a little bit more room to run. And I'm glad I did, because yesterday the market it probably frightened a few people, shook out a few week longs because the market did dip and gave back about half of its gains. But I still liked what I was seeing, so I went ahead and just held on to it. So we're still along the Russell, Nasdaq, and the Dow. Looking to do a little bit more shopping today. I wanted to get involved in some other markets, but at this time, I'm just gonna shop around. I'm gonna wait and see how things happen. By 10:30, I don't know. I wanted to get involved in gold. I liked the sell short recommendation on the dashboard. So just waiting to see if those intraday fundamentals are met. And I've been considering silver and nat gas, but the thing with silver is it's been a little choppy. So generally, I don't like too much chop. Nat gas, same story, except for the nat gas has been the most choppy of all the markets. I mean, absolutely choppy. And when it's that much chop, that means the market's trying desperately to find a some sort of momentum and just doesn't know what it wants to do yet, doesn't know what it wants to be when it grows up. So what I'll do is I'll stand aside when I see a lot of chop, because I'm looking for direction. We want to we want to be where the market is currently at, you know. And right now, um, even though the nat gas has been chopping, going up and down, the major direction, or I should say the momentum bias in the market for nat gas right now, believe it or not, is on the bearish end of the spectrum. Even though we had that pop, we always see it followed by a drop. And when you see stuff like that, you have to, take a step back and wait and see which way the market's going to break. So the Pulsewave reports are very good in helping you to discover that. So the last couple signals, the last major signal we had on nat gas came on March the 7th, and that was a primary sell trigger. Then we got another sell trigger on March the 14th. And then we just followed that up with another one on March the 18th. Okay, so far from the last trigger alert on that gas, right now the market, like I said, is still moving in the other direction. So it doesn't know what it wants to do. There's no buy trigger here. It's just waiting for the next trigger to short. So we'll see what happens. All right. Let's see what else is. Let's see what else we got. Yeah, I hear that. The statement in the chat is Bob Morarity is expecting a generalized commodity correction. Yeah, I can understand that. I can understand that sentiment. Just looking at the Pulsewave reports this morning, coming into it, we have a bearish reading on corn, and we have a bearish reading on soybeans, but we got a bullish reading on wheat. And so far, corn is down this morning. Soybeans are barely holding on, up 2 points, and then wheat, of course, did break out, but it's well off its highs of the session for the morning. So this, like I said, it's a lot of mixed bag here. Bond futures are down a full point and plus 330 seconds. I still think bonds are very expensive here. I think it has a lot of room to run to the downside because rates have no choice but to go up. And that's it. Rates have no choice but to go up. And that's going to add, more pressure on inflationary fears that are already, underway. Now, the talk on the street is that the Fed is prepared to do a 50 basis point rate cut on the next rate cut. They may even do it in between meetings. You know what I mean? So they claim the market is already pricing a 50 basis point rate cut in already. I don't know about that. I don't think that may be altogether accurate. What I mean is, yeah, the Fed funds futures may be indicating it, but that doesn't mean that's what's going to happen. All right. The Fed has a very bad track record as far as being able to read the current economic situation, and that dates all the way back to Greenspan. Remember remember when he was like, "Well, no one saw this coming." And you sure enough did see it coming. You knew what was coming, but the powers that be told you what they wanted you to do, and they told you what they wanted you to say, and you did it and you said it. Instead of coming clean and being like, well, I didn't have a choice. They were always, cheerleading their superiors. And whenever their superiors got it wrong, instead of fessing up to it and say, you know what, I messed up, I'm only human. Nah, they doubled down and said no one saw this coming. And then they made that the talking points and the narrative, on all the major news stations. All you heard them do was parrot, no one saw this coming, no one could have seen this coming, no one could have seen this coming, when in fact you had several gentlemen that came on CNBC, Bloomberg, Fox Business saying, this is coming, this is definitely coming, brace yourself, it's coming. So don't say no one could have saw this coming when people sure enough did see it coming, and they warned you on your own program. They were guests. You had them on as guests on your program, and they sure enough did warn you. So don't lie. But that's what happens though. That's how they do it. So this morning, bond yields are breaking out to the upside because bond prices are down, and they're down rather significantly this morning. Anything that's a full point in the bond futures is a big deal. That's a major move. Okay, so yields have no choice but to move inversely to the bond price, and that's why we see what we're seeing this morning. So it's not magic, where no one can see this coming. You did see it coming, and not only did you see it coming, but you knew it was coming. So where does this leave us? Well, today we're gonna watch and see how certain things unfold. Right now, the crude oil futures just went negative, so it's hovering near the lows of the session now. So this could be a sign in the energy markets that maybe a correction, which is long overdue, is underway. We'll wait and see. I don't want to put the cart before the horse. The market's just opened, so we still got room, to factor out and filter out all the noise. OIH is up over $2 right now, and so that in itself is pretty significant. We'll see if it Pulsewave's positive. So far this morning, it is not. But we probably will have a continuation pattern this morning in oil. Oil has pulled back over the last couple sessions, so that is definitely something to watch. The regular reports don't show anything bearish on the screen, meaning that there's no buy trigger for OIH this morning. Crude oil, same thing. We have no sell trigger on crude oil futures, no sell trigger on OIH. So we'll wait and we'll see. Will we get one by the close today? That is possible. Yeah, the Nasdaq is looking a little crazy today. Right now it's up 54. Okay, this just moved backwards. So now it's up 49.5. It has a way to go yet. Like I said, the markets are just, have just opened at 9:30 a.m. Eastern Standard New York time. So there's room to wiggle and to filter out the noise. It should be noted that we did get an official continuation pattern in the Nasdaq this morning. If you take a look at your dashboard, you'll see that. So this market, the Nasdaq futures, is giving us a stay long. Okay. As far as the Dow continuation pattern, no, but it looks like it's getting ready to trigger a continuation pattern. Even the S&P 500. Let's see here. Yes, the E-mini S&P 500 is pulse waving. It is now put in a continuation pattern for today. And then the Russell, my hustle continuation pattern. Let's see. Not quite yet. So I think we're waiting on the Russell and the Dow. Once the Russell and the Dow trigger the alert for continuation pattern today to start pulse waving, then we should be good to go. We should be good to go. Let's see what else. I think that's pretty much it. Let me see if there's anything else on the radar for this opening. Let's see. Just give me just a second to fish it out. See if there's anything good here. sometimes we get some interesting things. Okay, we still got news coming out of the Ukraine, and they're officially calling what's going on now with Russia and China a new Cold War for Russia and China. There's been a lot of nuke talk, and I think that this is, more wars, rumors of wars. You know what I mean? So I don't know about that. They're talking about a U.S. drought, here in the U.S. that could drive up cotton prices. So we'll see on that one. Not too sure about that. See what else we got. Sometimes we find some interesting little market tidbits. Sometimes it's not a whole lot, but you never know. All right, let's see. I think I got something for you here. All right, let's see. All right, so let's see here. All right, some people believe that the bond market is close to flashing a key indicator of a coming recession. We don't need the bond market to tell us that. We already know that. They believe that the yield curve is on the verge of becoming inverted, with the likelihood of a downturn growing since the Fed raised interest rates. Short-term rates are inching upward, and if they surpass longer-term rates, it usually means markets are out of whack, which is true. Bank of America said Friday that the 10-year Treasury yield has fallen below the 2-year rate ahead of 8 of the last 10 recessions. We also have, as of Monday, the U.S. 10-year Treasury rate was 2.1%, while the U.S. 2-year Treasury rate was 2.3%. Now, yields on the 5 and 10-year notes, meanwhile, are already slightly inverted. It's worth noting an inversion does not guarantee a recession as a standalone indicator. So that's something to keep in the back of your mind. Plus, there's a wide lead time. Since 1956, it's taken between 5 and 24 months for the U.S. recession to start after a yield curve inversion. Now, our main man, Mohammed El-Erian, is warning, and he did this in an interview on Monday, that he's anticipating a policy mistake from the Fed and suggested investors de-risk while the market is rallying. And that's market speech for you need to lock in profits, pop your way through some of these markets. I'm preparing to start popping my way through the Dow, Nasdaq, and the Russell. If we get a nice, healthy rally today, followed by a nice, healthy close, then I'll go ahead and I'll start popping at that point. It just depends on, what's going on. Generally, though, I like to just use the recommended stops on the daily reports and, pop that way instead of the intraday popping. But, especially when the markets aren't in a strong trend, either uptrend or downtrend. For me, it's better to start popping when the markets look like they may be running out of gas in one direction or another, and or consolidating. That's when I'll come in and I'll start popping. So again, just a brief overview of pop method. So pop method is, for those that don't know, is a methodology here at Pulsewave Trading that we have put together that helps you to manage your open positions. Every position that we put on, since we're swing traders, we're swing / longer term trend followers. So what we do, every trade that we put on that gets executed, we initially hold overnight. All right, that's what we always do. We always hold overnight. We assume we're gonna be holding overnight, unless there's some like super hyper parabolic bar move in the market, then I may be greedy and just go ahead and cash out. But generally speaking, when I'm triggered into a trade, I will hold that trade overnight just off the rip. All right. On day 2, that's when I'll decide if I'm going to start popping my way through it and moving the stops based on the pop method, or if I'm going to stick to the recommended stop on the report. If I think we're in a powerful trend, I'm going to stick to the recommended stop on the report. If it's looking a little shaky, like the market may be ready to start to pull back, retrace, then that's when the pop method comes really in handy, because it gets me out on an intraday basis, where the recommended stops on the report or a longer term perspective, and they're designed to keep you in the trades longer, so you can capture the majority of the move. We're not day traders. I'm not looking for tick charts and 1 minute and 5 minute bars. That's not what we do. We're trying to capture daily and weekly bars. So that's what we do. All right. So on earnings deck, we have Adobe, Carnival Corp, and Philo Mining reporting. And let's see what else. Goldman Sachs is thinking that the Russian economy will shrink by 10% this year. The bank said Western sanctions can cause Russian exports to drop 10% and imports to tumble 20% this year. And this will be the nation's worst contraction since the dark days of the 1990s. Let's see what else we got. The co-founder of Ethereum, Vitalik Buterin, sounded off on board Ape Yacht Club NFTs. He said that the garish digital collectibles contribute to the public perception of crypto as a place to show off obscene amounts of wealth. The peril is you have these $3 million monkeys, and it becomes a different kind of gambling. So he's speaking of crypto in terms of gambling. I would strongly disagree with that. Any market can become a casino if you approach it as a casino. And we all know the house always wins in the long run. We do not approach markets as casinos, because markets are not casinos. And markets are investment vehicles, all right, meant to bring you wealth over time. So that's what we normally do. All right, so Bill Gross lost money in sleep betting against nonsense GameStop and AMC, but now the PIMCO co-founder is up as much as $20 million. He's gotten ahead after sticking to his short strategy over the past 18 months, while the meme stock frenzy has lost its steam. Alibaba has just announced a huge share buyback. And car inflation, of course, used cars are still greatly overpriced because compared to newer cars, because they're not producing as much because of the chip shortage. And inflation is getting harder to avoid, from the dealership to the gas pump. Even owning a car is presenting a steeper challenge. Gas is spiking, and the price of buying a new car has climbed more than 14%. All right, so with that being said, that's what we got for this morning. So we're going to keep our eyes on stuff we're going to watch, and we're going to take it from there. And we'll see how these markets close. You know what it is. Smash that like button, and remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. And I'm out. Peace.